In this video, I'm going to show you how to find and invest in the next billion-dollar startup like Mark Cuban and Mr. Wonderful. I'm going to show you how to begin investing in startups with only $100 and no investing experience. Did you know that if the first 20 investors in Amazon held onto their shares until now, their initial investment would be worth over $1 billion today? That's a 200,000 time return on investment. The most successful investors did not build their wealth through real estate, stocks, and crypto. Instead, the best investors grew their fortunes by investing in startups before they went public. According to Inc., if you wait until a startup goes public to invest, you're missing out on 95% of the gains. Finding the next billion-dollar startup comes down to three things. First, the startup is solving a real problem. The problem is so painful that customers are literally desperate for a solution. They are willing and able to spend money to solve their pain. If you don't understand the problem or get why someone would invest and pay for the solution or service, then just move on to the next startup. Second, the startup is led by a world-class entrepreneur. They have a passion for solving the problem and an immense level of domain expertise. And they have the communication skills to articulate the company's vision and recruit rockstar team members to join and execute that mission. Third, speaking of vision, what is it? Do you believe that this idea can change the world? Is this problem big enough to become something massive? And do you believe that now is the right timing for this entrepreneur and this team to go after it? If you can confidently answer all of these questions, then you're probably onto something. And at the end of this video, I'm going to show you exactly where to find these startups and how you can get started with just $100. Just remember that this is the highest risk asset class because there's such a high probability for business failure. You know the saying, high risk, high reward. Think about Facebook back in 2004. Here's a startup that was founded by a teenager in a dorm room. No revenue, no business model, and a 99% likelihood that this idea was going to completely fail. In 2004, Peter Thiel became the first investor, valuing the startup at $5 million. Fast forward to 2012, and Peter Thiel was able to net $640 million, selling only a portion of his shares in the IPO. Over the next 10 years, Thiel sold off more than $1 billion in Facebook stock, all because he was the first investor of a startup that grew to be a massive company. But a startup doesn't have to go public to be a huge success. A lot of the best startups are eventually acquired by a larger company that creates a massive return for early investors. For example, in 2020, Lululemon purchased the fitness startup Mirror for $500 million. In 2016, Mirror raised their seed round, and those investors saw more than 20x return in just a few years. So what do these investors know that we don't in order to pick the best startups that have the highest likelihood for success? All these startups have one thing in common. Whether it's Facebook, Amazon, Bumble, or Mirror, all of these companies at one point were just an idea started by a world-class entrepreneur. So how did early investors have the confidence to invest in Jeff Bezos or Whitney Wolf? What makes them so special? It comes down to their vision, integrity, and conviction behind their strategy. If the founder doesn't believe deep down that their idea can change the world, then neither should you. Startups live and die by their founders, so the most important variable that determines whether a startup will succeed or fail is the entrepreneur that's leading it. I believe in this so strongly that I will only invest in entrepreneurs that I feel relentlessly motivated to bring their ideas to life and have a proven track record to back up their conviction. On my YouTube channel, I've done company deep dives on over a dozen recent startup investments, sharing why I invested and why I think they have the potential to change the world. So where do you find high growth startups? I'm going to show you three places where you can get started. The first are a group of websites that are open to both accredited and non-accredited investors. Check out WeFunder, Start Engine, and Republic. These are the three biggest regulation crowdfunding sites that startups can raise funding on, and you can invest in most of these startups for only $100. Here you can invest in seed stage startups all the way up to Series B and even beyond. For example, I just invested in Replit, the Google Docs for coding on WeFunder, at a $1 billion valuation. valuation. And prior to that, I invested in Gumroad on Republic at a $160 million valuation. Now, the second group of sites are only open to accredited investors. This means you have to make over $200,000 annually and have a liquid net worth of over $1 million. For this grouping, check out Seed Invest and AngelList. Now, on these platforms, most investments are going to start between $1,000 and $5,000. Now, the third way to find startups is good old-fashioned networking. Basically going to angel groups, meetups, and startup events. Putting yourself out there, getting referrals, and hustling for the deal. Now, over the last few years, I've taught over 50,000 people how to invest in startups before the IPO. That's why I created the Startup Investor Academy, the first online education program that teaches anyone step by step how to invest in startups, build wealth, and get started with no investing experience. Throughout the course of this program, you'll learn every essential part of investing in startups, even if you have no experience and don't have a lot of money to invest. The Startup Investor Academy is broken into 5 parts. In part 1, we'll go over how investing in startups works, why startups raise money, and how to make money investing in startups. In part 2, we'll draft your investment thesis and identify what types of startups, industry, and stage that you should be focused on investing in. In part 3, we'll learn how to evaluate startups by going over the startup scorecard, due diligence checklists, and how to evaluate world-class entrepreneurs. In part 4, we'll break down startup deal mechanics, valuation, different types of investments, and other legal and tax considerations. Finally, in part 5, we put it all together, an overview how much you should invest, where to find billion-dollar startups, and how to become a successful angel investor. So here's the issue with trying to learn all of this stuff on your own. You can spend hours watching YouTube videos, reading articles, books, and still not learn the right skills that you need because most of the resources out there do not focus on investing in high-growth startups before IPO. So right now, you're faced with a choice. You can keep struggling to learn how to invest in startups, or you can go through the Startup Investor Academy, learn how to invest in high-growth startups that can build your wealth. You'll also learn all the red flags that cause startups to fail and lose you money. This program teaches you how to do what the top 1% have done for over 100 years. If this sounds like the program that you've been looking for and you're serious about learning how to invest in high-growth startups, then click down below to learn everything that the program has to offer.